Hey everyone, welcome back to Corporate Decoder, the place where we uncover the real stories hidden within the boring corporate filings. And today, S-Filing hints at some interesting moves that could shake things up for Vivakor Incorporated. Before we dive in, make sure you hit that subscribe button and the notification bell so you never miss an analysis. Also, we've got a fantastic community over on Discord where we break down these filings in real time. Links are in the description below. Now let us get to it. Today we are looking at a Form 8K filed by Vivakor Incorporated. These reports are usually for significant events, and this one definitely has a few. Alright, so what exactly is this report telling us? It looks like Vivakor Incorporated is reporting on some unregistered sales of equity securities. Essentially, they've issued shares of their stock without going through the usual registration process with the SEC. The juicy part here is that this stems from a convertible promissory note. Think of it like a loan that can be paid back with stock instead of cash. On the 17th of March of last year, Vivakor issued a note for a hefty sum of $6,625,000. They actually received $5 million of that after fees on the 18th of March. Now, the big news in this filing is from the 29th of September of this year. The lender decided to convert $700,000 of that loan into over 5.2 million shares of Vivakor. As common stock, they had already converted other portions of the loan into stock before this. The company states that these issuances did not exceed 5% of their outstanding stock, which is a key detail for regulatory reasons. What is important to understand is why they can issue shares like this without registering them. The filing mentions they relied on Section 4A2 of the Securities Act. This exemption generally applies when securities are sold directly to sophisticated investors who don't need the same level of protection as the general public. The filing notes the lender here is an accredited investor and familiar with their operations. This is common for companies needing capital quickly. So what does this mean for Vivakor? Issuing stock like this dilutes the ownership of existing shareholders. That means each existing share represents a smaller piece of the company than it did before. The good news for Vivakor is that they've secured funding. The potential downside is for their current investors. Vivakor's common stock trades under the ticker symbol VIVK on the Nasdaq Capital Market. Keep an eye on this stock to see how the market reacts to this increased share count. Looking at the signatures on this report, we see James H. Ballingy, the chairman, president, and CEO signing off. This indicates leadership is aware and approving of these actions. Now let us put on our investor hats and analyze this. Vivakor seems to be in a situation where they need to raise capital and are using a convertible note as their tool. This is a common strategy, but it has its trade. The primary benefit is speed and flexibility in getting funds quickly without the lengthy process of a public offering. However, as mentioned before, it dilutes existing shareholders. The fact that these issuances did not exceed 5% of outstanding stock is a good sign that they are trying to manage dilution carefully. However, if they have multiple convertible notes or other financing arrangements that also involve stock issuance, the cumulative dilution could still be significant over time. A key risk here is that if the company's stock price continues to underperform or decline, the lender might be less inclined to convert future portions of the note into stock. Or worse, Vivakor may have to issue even more shares to make the lender whole. Conversely, if the stock price soars, the lender will likely convert, leading to more shares being issued but at a higher effective price for the company. From a Warren Buffett perspective, we want to understand the underlying business. Is Vivakor generating consistent revenue? Is it profitable? What is its competitive advantage? This filing only touches on a financing event, not the operational health of the company. So without more financial data from their quarterly or annual reports, it is hard to get a complete picture. However, this event signals that Vivakor is actively managing its capital structure and likely needs these funds for operations, growth initiatives, or to cover existing obligations. The question for investors is whether the capital raised will be sufficient and if it will be deployed effectively to generate returns that outweigh the dilution. Overall, Vivakor Incorporated is signaling a need for funding, and they used a tool that allows for quick access to that cash. The key takeaway for investors is to monitor how this impacts their stock price and to look for operational improvements in future filings that justify the dilution. Alright, that is our breakdown of Vivakor Incorporated's latest filing. What is your take on these financing moves and what they signal for Vivakor? As future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord community in the description. Thanks for watching. See you next time.